The session will be moderated by the Juan Pablo, Senior Emerging Market Analyst at StoneX Group. Joining him, we have Odonbaatar, CEO of Golomt, and also lastly we have Florian Schmidt, founder for Frontier Strategies, specialized in sustainable finance for emerging markets. Please welcome on stage.
Thank you very much. First of all, thank you very much for everybody to be here, and thank you very much for the panelists for being willing to participate and discuss capital markets and the rates on Mongolia. So just to start, just as we have been seeing and start discussing debt capital markets, is Mongolia has been very active in the past years. And we have seen not just active, but also a very sophisticated kind of action from the government in the debt capital markets. And if you think about it, the time has not been very easy. We had COVID-19, Ukraine, Russia, Middle East conflict, and the government has been able to be active, sophisticated in the way they participate in the markets. So who better than Florian to start telling us a little bit how was this, tell us a little bit the secret, how was the participation, the reaction, the interaction, for being so successful during these past years.
Thank you, Juan, first of all, and thank you for inviting me for this session. I've been advising the government of Mongolia on their debt management issues since 2017. And that was a time when I think it's fair to say Mongolia was with one leg in the mainstream as far as the investor base is concerned, with one leg outside of that. The country just got out of the major crisis, which led to a cataclysmic fall of commodity prices, which once again showed how cyclical commodity markets can be and how that can affect a commodity-driven economy like Mongolia's. Over the last 7 years or so, what we managed is to make Mongolia a true mainstream investment. Mongolia, in all the most recent transactions, had 300 plus investors in the order book of all types of investors, all types of geographies. Pretty much everybody who wants to play emerging market sovereigns now has to own Mongolia. What's the secret here? I think very important point has been transparency from the government. The government has been very regularly interacting with investors. And I heard from various investors personally that Mongolia got extremely good marks from investors for its transparency, for its openness. Secondly, we managed, I think, to get the best out of the narrative of Mongolia, which of course started with the commodity endowment, which is almost unrivaled in the Asian context. It moved forward to how that commodity endowment has been managed. We were talking a lot about diversification of the economy as a lesson from the 2015 commodity crisis. We're obviously looking at diversification of export markets, creating less dependency in the import markets. Some country has made huge steps forward there. And all this was really mapped against a very open handling of criticism of communication with the IMF. The relationship, make no mistake, relationship with Mongolia and the IMF is fantastic. But what I thought and what I told the government officials, what we need to do is be upfront with what the IMF communicates in the Article 4. And we have been religiously reading this. And it's always better to answer these questions upfront. If they say the weaknesses are your commodity-driven economy, so what external buffers do you have? So best to address this upfront before investors are asking. Or how do you handle the relationship with your two neighbors? And how do you manage your exports? So the construction of the two railways has been something we've been promoting very hard. I was absolutely delighted this morning to hear from various people that renewable energy is becoming a main topic. I've been waiting for this for a long time. We pushed this a lot in the investor roadshows that Mongolia is doing that and will do that. Frankly, we haven't seen much in the last couple of years. I was already wondering, okay, what are we going to tell them next year? But I see something's happening there. So I think we have new slides, a new story. The story is important. High yield bonds, if you call it high yield, some call it junk bonds. I don't like the term. I call them story bonds. So there always has to be a strong story, a strong narrative. Crafting a strong story has been a major part of the success, and we had fantastic support from various divisions within the government to create that. And what we created for the sovereign, of course, helps non-sovereign borrowers as well. So transparency, addressing problems or items in the paper, in the press, communicated by the IMF upfront, crafting a good narrative out of it, that helps it to expand investor base. That's what we've been doing.
Yeah, thank you very much for that answer. But there is no time when you don't hear right after Mongolia something related about China and the correlation with China, dependency on the Chinese market economy. Do you feel that in the past years that was the case, where people was looking at Mongolia as a correlation to China? And based on what you just mentioned, right, should investors in the future should be looking at the same way, exactly correlation to China, or look at Mongolia as a standalone, all the virtues that they have been doing in the past years, or the changes that they have been doing in the past years, and wait also some, when they see the country as a risk profit, wait all these good things that the country has been doing in the past years?
Yeah, the China relationship, of course, is hugely important because it's what drives the exports of Mongolia. As long as China Inc. was going well, investors saw this as a strength of Mongolia to have that relationship with China. Now we had this fall or this collapse of China's property market, and suddenly people realized, wow, that's 28% of the GDP going into nothing. What's that going to do to the Chinese economy, and what's going to be the impact of Mongolia to Mongolia? A couple of things to answer that, a couple of points. First of all, in 2023, when the property market was already down in China, copper usage in China increased by 10%. As China is spearheading the energy transition domestically and also assist other countries with their energy transition, and has become a leader in EVs, copper is needed. And I think Mongolia is fairly insulated given the path China has been taking. As far as copper exports are concerned, Mongolia is fairly insulated against that. Of course, that doesn't insulate you automatically from all the fluctuations of the copper prices, but the copper prices should remain well supported going forward. So I see a very large cycle here at play that is overriding, so to speak, the weaknesses you see in the Chinese economy caused by the property slowdown. Secondly, on coking coal, coal is a transportation cost game. And Mongolia has been working lowering the transportation costs. It's a scale business, a transportation cost play. With those railways now being operational and the transshipment points for the gauge transfer between Mongolian broad gauge and Chinese standard gauge are being sorted out. So that's under construction. MOUs have been signed, etc. That's moving forward, which means the transportation cost of Mongolian coking coal will go down probably from about $15 to $20 a ton to $8 a ton, which makes it even more competitive, which means the process we've been seeing over the last 4 years, that Mongolian coking coal is substituting seaborne coking coal, mainly coking coal from Australia, Canada, and the United States. That will continue. So like in 2019, before COVID started, about 15%, 20% of China's coking coal imports came from Mongolia. That's now 51%. And that process is there to stay as Mongolian coking coal will remain more competitive. Plus, Mongolia has managed to build a railway system that will now allow, and I've seen these trains at the border station in Zaminut toward China. I spoke with the local drivers. They said this coal is headed towards the eastern Chinese provinces. So for the first time, Mongolia is able not only to export its coal into Inner Mongolia, so to the Chinese side, but they're actually able to penetrate China with this. So notwithstanding the outlook for the Chinese steel industry, even if there is a slowdown, even if it's major, which I think the Communist Party of China cannot afford, because slowing down would be a violation of the contract between the Communist Party and the Chinese people. We make you rich, you let us do the job. Yeah. So assuming that continues in some shape and form, I don't see we see a major drop in steel production, but even if we see a drop, Mongolia will remain the last man standing. So from that angle, I think as far as the existing commodities, I don't really see a massive slowdown. The second, I'm almost done, sorry. The second big part here is diversifying the export base. And that is absolutely recognized by Mongolia. We have been communicating that to investors worldwide, that Mongolia is, through the third neighbor policy, through the strategic mineral partnership, looking for new minerals to export and looking to export them into different destinations. So I think the overall dependency on China from a diversification into other minerals and other geographies as export destination will be reduced. The second reducer of that should be the diversification of the economy in general. There's huge potential in other areas, not just tourism, but also things like food processing and agriculture, etc. Mongolia has all these resources. So I see the dependency on China slowly going down. But until that happens, I think it's pretty well insulated.
Thank you very much for that. And I totally agree with what you're saying, by the way. For Mr. Odonbaatar, now, like looking at the last 2-3 weeks, we have seen a very volatile market, right? I mean, Mongolia for the last years was very stable. People was actually like quite happy. But the last couple of weeks, I imagine that you have been very busy speaking with investors and with the market overall. What are you feeling like? Are they reassuring the support? What do they want to know? There's fear in the market. What can you tell us about it?
Yes, especially after Trump released the trade policy, I was asked many investors, how is the Mongolia doing? And also, are you going to buy your bond for price stabilization and liquidity? And also, they asking the Mongolian economic indicators more closely. So what I feel is, of course, we answered, we buy for price stabilization and liquidity, and also we tell them how the Mongolian economy going well, banking sector going well, the Golomt banks going well. After that, they shifted into more cautious sentiment, but still they confident about Golomt Bank and Mongolian sovereign bond.
Thank you very much. And now with this kind of volatility in the market, Jooyoung, there's one question for you. What do you feel that there is like financing options? Is the market going to look for different kind of financing, maybe some security? You think it's going to still that bonds going to be the main way of financing? How do you feel it's going to move from now on?
Yeah, so before I start answering the question, just want to say thank you to everyone that I'm proud to be and honored to be a part of this panelist. And just to give you the quick introduction for myself, I started covering Mongolia since 2017. I was at a previous institution, Credit Suisse. They have arranged multiple bonds for Mongolia government, MIK, and others. And then since I moved to this new institution, KS Asia, about year and a half ago, I also arranged the bond for MIK, Golomt Bank, TDB. So been very honored to be a part of this journey. The only problem I have is I have too many green stamps Mongolia. So Ben was joking about me. I was detained in the airport because they were thinking that I have a serious business in Mongolia, so I should have gotten the visa. And then there was an issue, but hopefully with the government, lots of government officials here, next time if I have a trouble, then I can call one of you guys to save me. To go back to answer your question, obviously the current yield, double-digit yields, do not make sense for all these issuers to tap US dollar bond markets. I do think because all of these issuers have been very successful in getting the supranational the funding, like the IFC, EBRD, ADB, DFC, etc. So I think they should be able to access these fundings continuously this year while the markets are volatile. I think the good thing about current situation is most of the private sector issuers do not have immediate the maturities coming due. They were pretty opportunistic and then smart enough to access the bond markets last year and then the first quarter of this year. So like MIK, Golomt, TDB, they all sort of the issue last year, so they don't have any immediate funding requirements. I guess from investor perspective, when I talk to these guys, they are pretty comfortable with the fundamentals of the Mongolian issuers. So and also they realize if you look at Asia, Mongolia is actually one of the least affected the country by this new tariff policies, right? So and it's not just Mongolia. If you look at all the Asia, the higher markets, they are all like pretty in the same magnitude. They were widened during this period. So, and I think when I speak to investors, they're pretty much comfortable with the supporting liability management exercise, i.e., they are comfortable with the fundamental credit of the issuer. So as long as there is minimal new money, and then this is more for the refinancing activities, they are ready to support. Also, I think once these market volatility goes away, they'll be supportive on the welcoming the new money from existing issuer and then also the debut name as well. The other aspect is I do think the current levels are actually pretty attractive moment for investor to get more exposure to Mongolian issuers, especially on the private sectors. If you look at other emerging market high yield countries such as Brazil, Dominican Republic, Turkey, Guatemala, I'm using these examples because they have the private sector the comps as well. They are trading anywhere between 100 to 200 bips above the sovereign, whereas if you see so the private sectors we have out of Mongolia, they are all trading around 400 basis points above the sovereign. So I guess both on the absolute yield perspective as well as the spread over sovereign perspective, I mean, this is really good time to buy from the investor perspective for these the Mongolian private sectors.
Thank you very much. Mr. Odonbaatar, now like that the sovereign is not issuing more bonds, right? They are just refinancing, they are not trying to increase the exposure into the markets. It's time, for example, for the privates, right? Like people that want to get involved into Mongolia is looking at the non-public sector, right? Is there any like space for banks like Golomt to explore more financing options or also even ESG bonds? What is your view on that? Like the non-public should be looking out to get more exposure?
Yes, I would say yes, especially ESG-linked bonds. The Mongolia have a lot of potential to that kind of bond. For example, when we issue in this January 50 million USD ESG social and green bond, there is a lot of investors' demand. They wanted to explore the opportunity potential in Mongolian market. Also, one good thing is all the Mongolian banks so committed to ESG-related lending, and all the Mongolian corporates, they ready to not only greenwashing, they ready to take a very practical action. So only challenges for cost. The ESG-related bond is just like ordinary bond. We need to decrease the cost. And also ESG-related projects usually funding more long-term funding, 5-6 years. But the bond market, we need to increase the long-term funding. And also cost-wise, I would like to say that regulators need to do some action for tax incentive and also some supportive action.
Thank you very much. So now I want to discuss a little bit more about the credit rating, if that's okay with you. We have seen some change also. I mean, Mongolia has been upgraded in the past. I think it was the only one that was upgraded by the 3 credit agencies in the past year. So that's been quite an achievement. Florian, what do you think were the key structural elements that push for this achievement?
Of course, there are a myriad of items that go into the methodology the rating agencies apply. Let me just talk about what perhaps are the 2 most important ones. So one of the items they're looking at is the debt stock, debt to GDP ratio. So that's like a quantitative factor, how that is evolving. And then more on the qualitative side, how is the debt being managed? Let's not forget, the ratings are supposed to give you nothing else but the probability of default. So what they are looking at is you have debt outstanding there. How high is the possibility that you actually remain current on your debt and are able to repay it? So in Mongolia's context, what we have been pushing a lot to the investors is, first of all, that the government has been on a very solid deleveraging path. The debt of Mongolia, the foreign currency debt, has not increased. It actually has decreased. We had a couple of liability management where we issued less than what actually was maturing and took part of that from the state budget. So there has been a quantitative deleveraging, which was, of course, amplified by the strong growth of the Mongolian economy. So the debt stock or the debt to GDP ratio has gone down quite dramatically, which is something the rating agencies did like. However, the other important item is, again, the quality. How do you manage your debt stock? Mongolia has been very proactive in the sense of addressing near-term maturities, addressing refinancing risk, making sure that the duration of the new debt that is being generated fits into the maturity profile. That we don't have a tower like $2 billion, which Kenya had to deal with a few months ago, and which made every investor worried whether they would be defaulting. I know it's great for the banks to say, let's do $1 billion or $1.5 billion because they make more fees, but is it also good for the issuer? So I'm on the other side here, and I'm saying we need to have a debt maturity profile that is actually manageable for the country. And Mongolia has never issued more than $500 or $600 million in a single year. I think Mongolia could handle $1 billion, but I still don't feel comfortable with it, and so do many people in the Ministry of Finance. We don't need to we don't need to be a member of the $1 billion club. We don't want to replicate what Kenya has been doing. We want to be modest, we want to be prudent, we want to be smart when it comes to this. And this is exactly one of the reasons why Mongolian debt trades like a double B, because we're behaving like a double B. We are not behaving like a single B when we manage our debt. And that's what the rating agencies are liking, and this is why we are in a process of hopefully in a positive trajectory towards an upgrade, which will help Odonbaatar, his team, and Randolph as well. The second important part is, apart from debt stock, debt management, are the external buffers, and that really points towards the idea of how bad could an external shock or commodity price volatility hit Mongolia. So this really ties into the foreign exchange reserves, which, if I may speak freely here, that I think is one of the serious weaknesses of Mongolia. Although Mongolia has been a very attractive destination for foreign direct investment and also for portfolio capital, the ability to generate more revenues to strengthen the external buffers there's room for improvement, let me put it that way. I think a part of that could be handled by the central bank themselves, by giving commercial banks who have dollar needs better swap rates. Because at the moment, the swap rates are like, there's no real swap market for Tobruk versus US dollars. By the way, that's also something for the bankers who say they are committed to Mongolia. They could start making a market in Tobruks versus US dollars and in the swaps, so that there is a little bit of liquidity, so not leaving the job all to the central bank. It's nice to show league tables and whatever, but this is something where the banks could actually really help the country, creating liquidity in this. And not leaving the central bank alone. But the central bank themselves, they could do something, giving better swap rates so that banks can raise capital, deploy it, and but broadly speaking, again, looking at the prospects of exports through the railways, etc., I think export through the third neighbor initiatives, through the newly discovered minerals, etc. I think exports will increase. The infrastructure is there. That should help from a macro fundamental perspective to strengthen foreign exchange reserves. Mongolia is also cognizant of imports. There's a refinery being built, so we're going to be less dependent on gasoline imports from Russia. There's a huge move towards energy independency, and I will salute the day when Mongolia doesn't need to import energy from Russia anymore, so Mr. Deripaska doesn't make so much money on Mongolia. So I hope we will see times that simply by managing exports and imports, that Mongolia's foreign exchange reserves will also increase. When we do our homework there, I think the rating agencies will respond accordingly.
Thank you, Florian. And what we have been seeing is that the key issuers in Mongolia have been following the sovereign rating, even though they might have better fundamentals. Mr. Odonbaatar, what do you think about this? Like, you think that that's fair for the players like Golomt?
Yeah, we kept sovereign rating, but not only Golomt Bank, all the Mongolian banks have been working very hard on improve its governance, risk management, and asset quality. So last few years, the Mongolian banking sector fundamental financials are very good, and credit portfolio, asset portfolio increasing a lot. And also thanks to the IPO, thanks to banking law, all the systematic banks do on IPO and Mongolian Stock Exchange. Since then, governance improved a lot. So I would say Mongolian banks could rate it above the sovereign rating, which we all desired, which we all working hard on achieving it.
Thank you very much. And Jooyoung, what do you think about the credit rating on Mongolia overall? Do you think it has been fair? The credit agencies have been harsh with them. What's the path from here? is there any key changes that you think that might be done to get at this upgrade that the sovereign wants? Tell us a little bit about it.
Yeah, I guess first of all, the discrepancy between ratings and where bonds are trading, pretty common in many areas. So it's not just happening to Mongolia, but also in many sectors and many countries. So I wouldn't be too worried about it. But I guess we cannot really ignore the technical elements in terms of where the Mongolia bonds are trading. If you look at Asia, the non-investment grade countries, there's actually other than Mongolia, there's no double B or single B country that is trading in the market. So we used to have the Vietnam double B, the bonds, but the benchmark bonds were mature without refinancings, so there's no more double B. We used to have, the Sri Lanka, Pakistan, and Maldives, but they are now all like a triple C area. So in the entire double B and single B, the segment, Mongolia is the only one that exists. And obviously, there's no yield floor in Asia, the sovereign market. So I think the Mongolia has been enjoying that the technical elements in the secondary markets. As Florian mentioned, I think the rating agencies, the thresholds are not that transparent because they will have to consider manufacturers, which is understandable. But I think they are moving into right direction, realizing how Mongolia has delivered in terms of the positive elements. And if you look at last 12 months, Mongolia is actually, as you know, been upgraded by all three agencies. And if I'm not mistaken, in the world, I think Mongolia is the only country that achieved that in the last 12 months. So I think you should be all proud of it. And then, I do believe this will continue in terms of the trend, positive trend. Yeah.
Thank you very much. And this is for the three of you. What lessons do you think that small frontier markets should learn from Mongolia?
Yeah, I would say transparency. For example, when we issue our first 300 million bond, the yield was 12%. So after that, we improved a lot of our investor relations unit. We did a lot of reports, transparency things. And after that, within 6 months, right, our yield decreased to 8.5%. So based on this instance, I would say the transparency to the investors was the best thing that other frontier countries should learn from Mongolia.
Thank you very much. Florian, anything?
Yeah, transparency is a very important point, and I think the fact that Golomt Bank started to produce monthly newsletters to investors and continuously engage them was a major part of the massive tightening of the credit spread, the performance Ben mentioned in his presentation. So transparency cannot and investor engagement cannot be highlighted big enough. Of course, the underlying fundamentals need to be good. As I said earlier, there has to be a story there, a narrative. Crafting that narrative is very, very important. And in the context of that narrative, it is absolutely important to have preparing this to investors to have a dialogue that can be done very openly, that can be held very openly in a sense of addressing criticism the IMF or others have made, or even analysts from banks or from anything that's been publicized, take whatever criticism they have on board and find a roadmap to respond to that and weave that all together into a strategic plan so people have an idea where does this country want to be in 5 years, in 10 years. Mongolia has been very good at this because they do have these visionary plans and they allow very well to map a narrative or create a strong narrative as a roadmap. So I think those two are the most important elements. One is really communication, the other one are the underlying fundamentals and how you put that into a story.
Yeah, I guess from the other aspect that other frontier issuer would learn from Mongolia is if you look at Mongolia, it's the only single big country who has the whole spectrum of credit entities in the curve. So if you look at what I mean is you have obviously sovereign, you have the government guaranteed bond as well, City of Odonbaatar. You have a SOE there, DBM. You have the private financial institutions like Golomt and TDB. You also have other corporates such as MMC and MIK. So you have the full curve out there. What that means is from the investor perspective, if you are Fidelity, BlackRock, like one of the big the real money accounts, then you really involve all various analysts to really delve into the country. Like you ask your sovereign analysts to look at the Mongolia. You ask the FI analysts to look at the financial sectors in Mongolia. You also get the corporate analysts to look at the like someone like MMC, right? So with that, like the entire institution is really investing and committing to Mongolia as a country, and then I think that has really helped the investors to be committed to Mongolia as well. The other interesting trend I observed in the past few years is if you look at Asia high yield markets, the Mongolia has been the only country who has increased their net issuance in terms of the outstanding bonds. What that means is let's say you look at a certain period of time, and then you look at the primary volume minus the maturities, which is net issuance of the bond. And Mongolia has been the only country in Asia, and which has been the justification for investor to stay, invested in this country. I mean, if you look at Indonesia, India, China, who used to be the most active, the high-yield countries in Asia. I mean, they still keep issuing bonds, but not every maturities they are refinancing with the new bonds. They also handle that with the other instrument, etc. But I think the Mongolia has been pretty consistent and continuously access these markets to stay the engagement with the investor. I think that's something that the other countries should learn from Mongolia.
Thank you very much. So we have a couple of minutes for anybody wants to do any question to the panel.
If I may, there's one more item where I think some of the people in the room here can actually help a country like Mongolia. When you look at frontier market fixed income investments, one of the biggest concerns investors is always having is, if I need to sell the bond, who's going to buy it? Who's going to make a market in this? Who's going to create liquidity? And this obviously goes back to the intermediaries where they would do it. So I really like, Ben, I liked your slide about how much you're trading in Mongolian bonds. It's always been one of the key questions as an advisor I've been asking, whether I worked for the government or the city of Ulaanbaatar or for Golomt Bank, to, in the RFP, not to look at league tables, because every bank says they're number one in everything. Yeah? So league tables need to be handled with care. The key point here is to have banks who actually make a market, and if times go tough, they say, I'm going to help you to unload your bond. And the more bankers are actually making market, or the more institutions are making a market, the tighter the bid-offer spread is, and the less volatile these bond instruments will trade. And the less volatile they are, the more investors find them attractive again. So I think the question of market-making liquidity in a frontier, for a frontier issuer, is of utmost importance. And I just wanted to mention, because you were asking what has Mongolia done, or what are the lessons from Mongolia for other, that's like lessons from the issuer to other issuers. But what is also important is that we see institutions who say we are committed to Mongolia, not just saying that, but actually acting like it, and making a market in such bonds is a very important step towards that.
Thank you very much. So, any question? Yeah.
Thank you for a fascinating panel. I'm the head of Mongolian Stock Exchange, Odonbaatar, and we also is the commodity exchange in Mongolia. We trade over 43 million tons of copper, coal, and other products. So my question here is, in order to attract more investment from abroad, what like infrastructure organizations in Mongolia, like Mongolian Stock Exchange, can do to be assistance of other listed companies as well as other potential IPOs in the future? And if you have suggestions, I'd love to hear. If you, it can be more than one recommendations. Much appreciated. Thank you.
I can try to take a quick crack at this. I think the biggest problem Mongolia has with regards to the development of its stock market and also its domestic bond market is the very limited, and also the banks who are trying to where the main shareholders are trying to divest, is a limited wallet size. It is how relevant really is Mongolia in that context to international investors. We can create a perception of relevance by doing a proper marketing from the sovereign side, and any issuer can help with that. From a stock exchange, what you are doing is absolutely plausible. It's the right thing to do, but I think to enhance the relevance, if there are, the first thing that would inevitably come to my mind is there any way that the Mongolian Stock Exchange could link up to some bigger international stock exchanges, because that will immediately increase the wallet size. You're no longer confined to the potential 3.5 million people you're targeting. Suddenly your market becomes much, much bigger. I'm not sure, I just heard this question for the first time. I didn't do any deep thinking about it, but immediately it would come, the problem is the wallet size. So if you can increase the wallet size, you increase your relevance. You increase the relevance, you increase the capital coming in and trading. So if there's any chance to partner up with a stock exchange, whether this is in China or in the UK or in America, then that would obviously be something that could help.
Yeah, one thing I would add is in terms of financials, I think so. If we, from investor perspective and from a ranger perspective, when I first came up with the new name, and then when we think about whether this is a feasible entity to market to investor, right? So sometimes some of the entities that is listed in Mongolia Stock Exchange, it's a bit hard to even find some of the English information. And if you go, I think there, if there's some sort of linkage with the Bloomberg, better connection with the Bloomberg, so that if I hear some name and then I know this is listed in the Mongolia Stock Exchange. Then if I go to the Bloomberg and then just type in the ticker and then it comes out with the financial that can be translated into US dollar. That process, to be honest, when I looked at some of the names before, it wasn't that transparent, and many of the time it's outdated. So if those can be sort of corrected in a way that if people can really access the numbers of the companies, they'll be, I think they'll really set the tone better for new investor to look at some of these the potential issuer, whether they can be feasible to market to investors.
One more, having had 3 minutes to further think about it. I really like the Mongolian banks. I like Golomt Bank and the banks. They are giving fantastic dividends to investors. I always thought if Mongolian banks really want to go public and want to expand their investor base, that has to be a dividend play, because again, the wallet size is so small. It has to be a dividend play. So they're paying very generous dividends. So I would be interested to buy this, to buy Golomt or Han or TDB, but I can't. Because I'm a foreigner, I need to open an account with a domestic brokerage, which nobody does for me because I don't live in Mongolia. My Singapore banker will tell me, sorry, we don't deal with Mongolia. We can't do this. Yeah, we can't settle it and what have you. So I'm one person here, and maybe there are some more in the room who would say, yeah, I would love to buy this, but I can't. So the question is here, would you consider admitting banks with like a dual currency listing in US dollars, which then foreigners can buy as well? I do fully understand you don't want your domestic currency being subject to some inordinate speculation, but if you would allow these banks to say we can do a dual listing, not in terms of 2 stock exchanges, but in terms of 2 currencies, you can buy Golomt or whatever in US dollars here, and foreigners are allowed to buy this, then the bankers in Singapore or Hong Kong would say, yeah, we can handle that. Maybe through a correspondence bank or a correspondence brokerage in Mongolia. I think that would really, really help getting people into, and this should be a relatively easy thing for you guys to do, I think. So just some additional thoughts.
Thank you very much. Any other question? Okay, well, that will be all. Thank you very much. Thank you very much.